there was a the feeling was that there was a hedge trade going on as well. Okay, so does that make sense? There was a hedge trade getting done at the same time. So, this had obviously started to kick off. I tried to get as tight to the price as I could. So I was asking what the guys were doing on the trade. So here's the screens anyway. So we'll have to just work our way through this. Squeeze it along a little bit so that I can show you. So this was the last trade. They sold the Japanese yen, made some nice profits. They sold the knob spread, remember, made some nice profits on the last trade. So this is now 327. Swap dealers are getting add-on trade. They're getting more Japanese shorts at 91.23s, okay? So 91.23s. So 91.23s, this was at 327. So there's 325, 326, 327 on the left-hand side. So 91.23s looks as if that would have been achievable. You can see there's that sell trade there, right? So that's pretty obvious. At the same time, there was a knob short trade at 12 getting traded. So 12s on the knob short, and that was at the same time. So 27. So that's this trade here. So there was a knob short getting priced at this price here, 237 12s, and there was a fob long at 14s. So I don't know where, because when I'm looking back at that, the 14s was a bottom edge price. So they must have taken that trade at some stage. So that trade wasn't visible at the time when I got the information, but you can see that there was possibly some knob spread trades getting taken in here. So realistically, obviously, if I posted this, you may well have been able to get a trade on about 18s. So it's a fair distance away, but still nonetheless, you would have known exactly what the trade was. Remember, it's a fob long trade, not a short trade, a long trade in here. So you can see that that's at 27 is just in here. So there's the trade there. So that's the trade you've got. Everybody on board? That's the trade you've now got. Short J's, short knob spread, long fob spread. So what happened to the trade? The Japanese yen continued up to a high price of 26s. And then obviously at that stage, the Japanese yen had an absolute crash in price. Pretty good? Pretty good trade. So what happened to the knob spread? Well, the knob spread lost money because the knob spread went from 12s to 15s. So we lost 3.5 points on the knob spread. So 3.5 points, $31 a point. That's $100, right? So on this trade, we've actually lost about $100 on on that trade. And now, obviously, the fob spread was in. They told me 14s. The trade was done at 14s. But by the time I got the information, the price was at 18s. So you can see that trade at 18s, you can see the fob long trade at 18s is just traded 30s. So the fob long trade actually made a profit of 12 points, which offsets the knob spread loss of 3. So a profit of 12 points, that's a profit of $360 on the fob spread long. And that's on the basis of that 18 fill, not the 14 fill that these guys had been doing transactions with. So you can see the Japanese yens went from 23s down to a low price of 96s. 23s to a low price, guys, of 96. That's a pretty good trade, isn't it, when you think about it? That's based on a 2-lot. There's two yen contracts against the fob spread. So that's a $675 profit minus 100 plus $360. So it's about a $900 net profit for that little position. And it's all tweeted there on the screens on the right-hand edge there for the timing of it. So that's another spread profit for these guys, that's for sure. So that's a brilliant bit of business, isn't it? A brilliant bit of business. I'll take screenshots and obviously I'll just calculate out all of these things as we go forward. The first trade made money as well, by the way. The first trade earlier made money. It just didn't make as much money. And I'll just put swap close on the screens there for you so that we can Just make sure that that timing is time-stamped. And no, it's discussion, John. It's when I'm trying to do some business and I pick up the phone basically, or chat on the screens, and I'm asking if anybody's done any big business recently. So these guys, I'm specifically talking to this one guy who's a dealer, and he just happened to say that they were doing the same add-in trade that they had been doing earlier on in the day, but this time they'd added a FOB spread long to hedge it. So obviously they were concerned that the knob spread was going to start drifting higher. Because they were obviously concerned that the knob spread was going to drift higher, they obviously, instead of closing off the knob spread, they just went straight into a FOB spread, which is going to make, for anybody that trades the FOB spread, everybody will know that the FOB spread is going to make a lot more money than the knob spread is going to lose, correct, Reeve? You'll know that. So the FOB spread will always make more money than the knob spread loses because it's just more volatile. And it gives you more of a directional bet on that trade. So it made sense to me as soon as I heard them saying that they sold more trade. I thought, interesting. But then when he added in the fact that they bought the knob spread as the FOB spread, I thought, okay, that's the crunch trade right there. It is pretty much an outright trade, Reeve. Absolutely, it is pretty much an outright trade. But obviously, because they're in a knob spread short, there might well be an offset, because they may well have, obviously, if you're in a knob spread short, you're selling the ZN and you're buying the ZB. If you're in a FOB spread long, you're buying the ZF and you're selling the ZB. And obviously that means that the two ZB contracts cancel each other out, don't they? So you end up with a belly spread. You end up with a belly spread, long the 5s and short the 10s. You end up with a belly spread on that bit of business, long the 5s and short the 10s, just by buying some ZF and closing off the ZN contract. Closing off the ZB contract. Does everybody understand that, guys? You end up with a belly spread. So this was the trade, if you remember. Selling the Japanese yen was one of the pieces to the jigsaw puzzle here. But if I sell ZN, I'm buying ZB, one contract of ZB. If I'm buying ZF, I'm selling one contract of ZB. So the buy on the ZB and the sell on the ZB offset each other. So that's why it was legged in. So they offset each other on these trades. And what I ended up with is short ZN, long ZF on a 4x3. Short ZN, long ZF on a 4x3. And the difference was quite significant. Very, very, very substantial profit on that trade. And obviously the Japanese yen trade made an absolute killing from that swap sell. So I think it was a brilliant trade, Reeve. I mean, that is the kind of trade that just shows the quality of, or the types of trades that banks will do. They've went from a knob spread to basically a 5s, 10s on a slightly unusual ratio of 4x3. But that's okay. I'm sure that's not going to concern them when it makes money. And a good trade outcome, guys, a very good trade outcome. Just a word of warning for the oil traders. Natural gas has exploded north. Forgive the use of the phrase. Natural gas has exploded north in price, guys. So just so you know.